Hello and welcome to First Look ETF. I'm Stephanie Stanton with ETF Guide. It is great to have you with us. Coming up on this November edition of First Look ETF, a sneak peek into a new fund that combines e-commerce with fast-growing frontier markets. Plus, the first U.S. listed ETF that invests in the king of cryptocurrency. That, of course, is Bitcoin. And an ETF that helps investors stay true to their personal values regarding climate change and equal rights. But first, we begin with a quick recap of the newest ETF launches on the New York Stock Exchange. Joining us now is Douglas Yones with the NYSE to break down the latest numbers. Hi, Douglas. It's good to see you.
Hi, Stephanie. It's great to be back.
So tell us, what are we looking like in terms of the new ETF launches?
Yeah, look, October has just been a milestone month every way you look at it. We launched 49 new ETFs this month. That brings us up to 384 ETF launches year to date. And we're just breaking records everywhere. Cash flow for the year, $745 billion coming into the ETF industry for the first time ever, crossing the threshold of $7 trillion in assets under management for the ETF industry. And it's not just in one or two places, right? We're seeing it across the board. Over 60 brand new issuers have come into the ETF market this year. So the pie, the growth, the marketplace, it just keeps growing.
Yeah. And on that note, I understand that your active proxy structure just crossed the 2 billion with a B mark. That is a huge milestone. Tell us a little more about this exciting news.
Yeah, this project had been a decade in the making at the New York Stock Exchange. We now offer an out-of-box solution for an asset manager that wants to be very active with their funds. We know active has been 65% of our launches this year have been active ETFs. Some active managers don't want to show their holdings every day. This is now a solution for someone who doesn't want the full transparency of an ETF. There's now 10 ETFs that are following the New York Stock Exchange model. And as you mentioned, we broke $2 billion at $2.3 billion right now at the end of October. So for anyone watching interested in a semi-transparent active ETF model, please contact us at the New York Stock Exchange.
All right. Incredible stuff going on there. Thank you so much, Douglas. It's good to see you.
Great to see you as well. Thank you.
Some great stuff happening over there at the NYSE. Now, before we move on, I want to give you a quick reminder that we simulcast First Look ETF on iTunes, Spotify, Amazon Music, and all of the other major podcasting platforms. So be sure to check us out there. Billions of people in emerging and frontier markets are poised to enter the global digital economy via their smartphones. And this could trigger a consumer revolution like we've never seen before. Well, here to discuss a new ETF targeting this exciting space is Kevin T. Carter. He is the founder and chief investment officer of the EMQQ and FMQQ ETFs. Hi, Kevin. It is so great to have you with us.
Thanks, Stephanie. Great to be here.
All right. So there are some huge opportunities right now in emerging markets and even smaller frontier markets. Tell us about the thesis behind your newly launched fund, the Next Frontier Internet and E-commerce ETF, which is called FMQQ.
Sure. Well, the thesis for FMQQ is also the thesis for EMQQ, which is our flagship and our original product. The only difference is that FMQQ is an emerging markets and frontier markets internet ETF that excludes China. So both of them really have at their core the same fundamental story, which has three components. And it's really three mega trends that are happening at the same time. In emerging markets, you have 85% of the world's people, and even more of the future as measured by young people under the age of 30. Emerging markets are about 90% of the world. And the people are what's emerging. They're moving on up and they want stuff. They want more and better food, clothing, appliances, entertainment, cars, and they want their kids to go to college. And that's the story. McKinsey calls it the biggest growth opportunity in the history of capitalism. So that's the foundation. Billions of people that want to consume and have the things that we've had for really generations. And the second mega trend, which again, we're part of all three of these, but we're the first people involved. The second mega trend is called the computer. So, I've had a computer for 30 years, going back to when I was in college. But the reality is most of the world's never had a computer before. And all of these new emerging market consumers are getting their first computer. It's not on their desk, and it never will be. It's in their pocket, and in most cases, it doesn't have an Apple logo because it's a $60 or $80 Android-based smartphone. And that computer, that supercomputer in the pockets of these new consumers is also giving them the third mega trend, which is something I've had for 25 years, called the internet via mobile broadband and Wi-Fi. So that's what EMQQ and FMQQ are all about. It's the same things we see in our lives as, the Facebooks and the Amazons and the Googles have taken over our worlds, but it's even more powerful, this story in emerging and frontier markets, because these people have never had a bank account. There's no debit cards in people's pockets. There's no cable televisions, and there's no Target stores. So these people are leapfrogging traditional consumption, and it's a really big deal, as you said.
Yeah, it sounds like it. So in light of all of that, and you talked about the FMQQ being the most recent, tell us about some of the holdings and how you guys actually target the companies that you're going to include in your ETF. Sure.
Well, EMQQ is about 65% in China, and China really has dominated the story, and that's because it's got the largest population in the world, and it's got the biggest e-commerce market in the world by far. But the story is starting to spread into the rest of emerging markets, into India, Southeast Asia, Brazil, Nigeria, Turkey, all over the place. The story is spreading. And so you have companies like Mercado Libre, which is an Argentinian company that's both the e-commerce and fintech leader in all of South America, Brazil being its largest market. And the other notable one is a company called C Limited, which trades on the New York Stock Exchange with the ticker SE. And this is a fascinating company. It's been one of the best performing stocks in the world over the last few years. It's been sort of neck and neck with Tesla. And it is a combination of gaming and e-commerce and fintech. And it's, again, headquartered in Singapore, but it's generating revenue in Indonesia, in Malaysia, in Vietnam, in Cambodia. So it's really all over Southeast Asia. So there's some of the larger companies, but the FMQQ story, the stuff that's happening beyond China has gotten so exciting, and it's accelerating. We've had the Amazon.com of Poland came public last fall. The Amazon.com of Indonesia just came public. The Amazon.com of Turkey just came public. So it's the same sort of business models that we see, but it's the localized version, and it's really starting to accelerate.
Kevin T. Carter, thank you so much for joining us here today on First Look ETF.
Thanks.
Bitcoin is one of the fastest growing assets in history. It took just 12 years for Bitcoin to hit the $1 trillion market size, whereas it took Amazon and Google more than 20 years to achieve the same feat. Well, here to talk more about Bitcoin and a new ETF linked to it is Simeon Hyman, CFA, Head of Investment Strategy at ProShares. Hi, Simeon. It is so great to have you with us.
Thanks for having me.
All right. Well, before we dive into your ETF, for those who may not be familiar with Bitcoin, how it works and how it's an investable asset, can you break down Bitcoin? What is it and why does it matter?
Sure. And I'll try not to go into the weeds of the original paper written by the anonymous guy. But the easiest way to think about it, Bitcoin is a decentralized digital currency. So you buy and you sell and you exchange it without any intermediaries like a bank, but also it's not run by any government. And that's really important these days because this is an environment where folks are concerned. Maybe central banks are printing a little too much money. Maybe they're too early to hike interest rates. Maybe they're too late. Bitcoin has none of that because it's not run by any country or any institution. And the amount of it is fixed. So in many ways, folks think of it perhaps as digital gold. That's not precise, but it's close enough for a lot of people to think about it that way.
Okay, so you guys just launched the new Bitcoin ETF, BITO. It is the fastest ETF to ever achieve $1 billion in assets. So congrats to you guys. It is also, again, the first Bitcoin linked asset in the U.S. to use the ETF structure. Now, tell us a little bit more about this fund and your strategy.
Well, that whole decentralized nature of Bitcoin makes it a little tricky to actually invest in it. Is there an exchange I go to? Actually, there are many exchanges. I need this thing called a wallet, a cold wallet, a warm wallet, all sorts of interesting questions. We've solved for that with BITO, B-I-T-O, the first Bitcoin-linked ETF in the U.S., and it's a belt and suspenders approach. First, it's just an ETF. That means you can buy and sell it just like a stock in a regular brokerage account, and it's governed by all the things that govern mutual funds and ETFs. And then it invests in those futures. And those futures themselves are a regulated place. It's a place where there's a clearinghouse. Counterparties are managed so weird things don't happen. That's the technical term. Weird things don't happen. And so a belt and suspenders of the regulated futures market and that easy-to-use ETF structure, we think solves a lot of the challenges of actually investing in Bitcoin. Challenges that arrive from its underlying utility, but hey, if you want to invest in gold, you don't have to kind of be a metallurgist or a jewelry maker. In the same sense, many folks want to invest in Bitcoin without having the complexities of some of the things that it's used for in its underlying use case.
Yeah, exactly. And, as you mentioned, maybe some people are nervous about actually getting the wallet. There's still that uncertainty. You guys were able to get regulatory approval. Were you surprised at all by the interest and the success of your ETF?
We weren't really surprised because there's so much demand to invest in Bitcoin, but it's just a little tricky up until now. So we really were not surprised by the pent-up demand. And I should add that it's a robust I hate the word ecosystem, but I'll use it as an example. Not only is the ETF, is BITO trading with lots of volume, so there's buyers and sellers there, but also there are options trading on BITO. So it's created a ecosystem, I'll use it again, where price is discovered well, information is transmitted into price, and then you can invest in a very simple manner. So we think there was a real pent-up demand for the ability to trade and, importantly, invest in Bitcoin in this manner.
And where do you see the future going? What's next for this ETF? Apparently, it looks like you guys have opened the door for Bitcoin, regulatory approval, ETFs. What do you think?
No one has a crystal ball. And of course, we're certainly really excited to be the first with this futures-based ETF to the market, because first means a lot in the ETF space. The volume, the options, those are really important for the health of and growth of an ETF over time. But certainly it's an evolving market, and innovation is very core to us at ProShares. So we'll be watching both the maturation, the evolution of cryptocurrency, decentralized finance, and the regulatory environment. And should we see opportunities, we'll be looking to explore those.
All right, Simeon, Hyman, thank you so much for joining us here on First Look ETF, and congrats on the success of BITO.
Thank you.
These days, investors are demanding much more from their portfolios than just satisfactory performance. Some may want to invest in companies that align with their social or environmental values. For example, investors might favor companies or organizations that help protect the planet, or those with a focus on social justice. Well, here to discuss a new lineup of funds known as the IQ Dual Impact ETFs is Wendy Wong. She is head of sustainable investment partnerships with New York Life Investments. Wendy, it is so great to have you with us on the show.
Yeah, thank you so much for having me.
All right, tell us more about this growing trend that you're seeing of investors who are focused on investments that align with their personal values. How does the IQ Dual Impact ETFs play a role in this movement?
Well, so investors wanting to match what they're doing in their investments in their consumers is sort of following a retail consumer brand. I mean, there's definitely been an increase of values-driven consumers who are using their dollars to influence change. Forrester in 2020 reported 68% of consumers said they consider a brand's social reputation before buying or doing something with that company. And so New York Life Investments is looking to address this through our IQ Dual Impact ETFs. These ETFs combine the potential for financial gain while also helping to inspire change. We think about it as delivering me-focused returns and we-focused good. So for the me-focused returns, we start with a compelling investment thesis, a long-term, sometimes it's demographic, based on some type of growth opportunity. And then we work with a nonprofit for each ETF to leverage their expertise, and that influences our index design. And then finally, for the We Focused Good, New York Life Investments will be contributing 10% of its management fees to each of the nonprofit partners for the ETFs. And then these nonprofit partners will use that contribution to fund a specific program that's aligned with that ETF. So we'll really be able to measure the impact of our contributions.
So let's talk about green energy, because obviously investing in green energy now is gaining ground. I know you guys have the IQ Clean Oceans ETF, and that ticker is OCEN. This offers exposure to companies who are trying to reduce pollution and improve their usage of natural resources. Tell us a little bit more about this fund, how it works, and what some of the holdings are.
Yeah, so this is one of two that are focused on green investing. So OCEN includes companies that are working to help protect and clean up our ocean. So there's a couple of different examples I can give you. One is pollution reduction. So companies who are focused on waste management, sustainable packaging, the circular economy, and clean water treatment. Like there's a German consumer apparel company that in 2020, for the first time, more than half of the polyester that they used in their products came from recycled plastic waste. And then from 2024 onward, they're committed to only using recycled polyester. We love that story. Another example is an Irish consumer products company. They do sustainable packaging, and they use 75% recycled fiber in their products, and they reuse material whenever they can. They recently worked with a company that does lip balm to develop an innovative custom packaging that is 100% recyclable. And so the lip balm company was able to reduce their use of plastics by 40 US tons a year. That's equal to a reduction of CO2 emissions of nearly 110 tons. That's a lot of lip balm. From a clean energy standpoint, there's a Finnish company that provides solutions for power generation and marine propulsion for boats. And then on sustainable ocean front, there's a Norwegian company who supplies sustainably farmed salmon and seafood to over 70 markets worldwide. 100% of the yearly harvest is sustainably certified. So these are examples of some of the companies where we like their story and they were included in the index.
Wow. Okay, so you guys also have an ETF that deals with social justice, equality for women. Tell us about that.
Yeah, well, gender equality isn't just a social issue; it's also a business issue. So a lot of companies are, trying to, make their management and their workforce more diverse. So the gender equality ETF, which is EQUL, is comprised of 75 U.S. companies that are screened on 19 different criteria. Beyond whether or not there's representation on the C-suite, it goes much deeper than that. It's whether they're executives, senior manager, if they're promotion opportunities, they're graded on policies that promote equality. If they also are graded on equal compensation and work-life balance. So if they have equal pay or a gender pay gap, what are their parental pay leave policies, and what are the flexible work options? So 19 criteria in total.
Well, these all sound very positive, and we want to thank you so much for sharing more about them here on First Look ETF. Wendy Wong, thank you so much for your time.
Thank you so much.
And that does it for this edition of First Look ETF. A big thanks to all of our guests today, including Douglas Yones with the New York Stock Exchange for updating us on the latest trends in the red-hot ETF marketplace. Before we go, be sure to check out and tune in every month for new episodes of First Look ETF. We're going to keep you plugged in to all the latest ETF launches and important trends in the ETF space. You can also listen to our show on iTunes, Spotify, Amazon Music, and other major podcasting platforms. I'm Stephanie Stanton. Thank you so much for joining us for this edition of First Look ETF. We'll see you next time.